right. This was a wild and woolly earnings season, and it's funny as we talked about in the trading community, in the trading room yesterday, when the market was down 500 blocks, 500 points in the Dow, we seem to have gotten like a bazillion. I personally had at least 7 different emails from, and I'm not sure why or how I'm on these people's lists, all claiming that the top is into the market and that they've called the top and you need to watch your portfolio and things of that nature. While granted, it didn't behave as bullishly as I am positioned for coming into yesterday's trade, guess what? I think our analysis proved to be correct. This has been a very difficult and challenging earnings season, but I think we will prevail to watch the markets, meaning the stock indices, test the highs again. It is been said, and many of you may have heard this, that the stock market can't rally unless technology is behind the move. And well, when you start looking at Amazon at all-time new highs, up $150 right now on positive earnings. When you start looking at Boeing, which was positive news, Baidu is up $20 right now. A lot of these are insane moves that we're seeing uh, based on positive earnings. The bad stuff, we take a look at Royal Caribbean. I personally liked Royal Caribbean and think that their model will do well. We'll see how it ends this week. More importantly, it is coming against a very strong shelf of support on monthly. But let me get into other names. MGM, Steve Wynn, Las Vegas Sands. A lot of the casinos had issues, except for other casino names like Penn, PENN is the symbol, blew off to the upside on good earnings. So it's not, I think the key issue is not all stocks in every sector are doing well. Another insane move today happened in, if we go down the list, I'm going to change this to net performance and we'll collate it in terms of net change today. Chipotle Mexican Grill, CMG. This may have been a surprise by many, and yet what it did was, and I'm going to show you this consistency of this pattern that has been showing up before earnings to a degree. A high closed doji. That's a blue candle, and the market closed greater than that high. And of course, you can't send out an email saying, hey, after the fact, the market's now generated a high closed doji. We have to watch this on the radar screen uh, as the market's closing to get a clue. Does it work all the time? No. But here's an interesting coincident factor. Look at Amazon. Amazon did the same darn pattern. It formed that little high closed doji before earnings was announced. When the market closed, Amazon's going to open up somewhere up here above at new highs if it maintains its current structured value. So again, it's not how or important how a market opens, it's how the market closes. And it's not as important how a market closes the day as much as maybe how the market closes the week. How I've collated these columns is real simple. We have, many of you are familiar with my indicators on Thinkorswim and of course on Trade Navigator and Genesis. And all we've done is taken the daily signals, and whether those from the pivot, the PPS, and this is a new indicator, the last conditional change. This tells us that we had a bearish last conditional change breakdown or a bullish last conditional change breakup. It helps qualify the strength of the buy signal. The final column is high and low closed doji. So if the market is coming near the close and it starts blinking, that tells us we want to be focusing on those stocks into the close. This is again Visa, and it has coincidentally broken out to another new high. So if you look at what's happening here in terms of net changes for today's action, it's Thursday. Friday is the end of the week. We're going to have some very dynamic changes from earlier in the week, from the charts that look bearish to now, oops, not so much on the bearish side of things, the sector of things. A lot of the energy stocks are moving up. Exxon is coming out tomorrow on Friday. Generated a nice little, this is exactly what that last conditional change breakout is. If you notice here, the gray line, it generates a buy signal. It breaks out of what would be resistance. That's the LCC indicator. something that's not new. I wrote about the last conditional change in a book that was published 14 years ago called Candlestick and Pivot Point Trading Triggers, and the technique is still effective and works today. We've just programmed not just an indicator, but a systematic way of trading that signal in an automated algo product as well. So looking at the market here, you take a look at some of these net changes, and this is huge. And you'll notice that a lot of them, the big numbers, Square, for example, Tractor Supply, Baidu, Facebook, Amazon, Intel, today's earnings up 11%. This does not bode well if you were bearish the market. Looking at the rest of the week, again, it's not that you can say, hey, this stuff is great, because as you can clearly see, there were some not so good news, at least in the um, cruise line area, especially Carnival. We also had looking at Royal Caribbean, and then looking at maybe eBay, and then the casino operators, MGM. So some of the names did not bode well. Other stocks did and have performed pretty well. Some of the stuff that we're focused in on, of course, we've got this nice little close in that high close doji in Johnson & Johnson. The only difference is Johnson & Johnson would have been nice if it closed greater than that gray line in the sand, and that'll probably give us an idea that Johnson & Johnson's is at the bottom end of a trading range, and we should see at least some upside. By the way, what you don't know, or what you don't see on this chart here, Johnson & Johnson, there's a strong seasonal shift in some of the drug manufacturers that comes in late April. And so this is late April. So we're starting to see some upside in there. And interestingly enough, OIH is another one that I'm probably more prone to be, and what we're trying to establish positions more so in OIH than XOP. What does that mean? The oil service sector, to me, looks a little bit more bullish, and I want to just demonstrate a couple little uh, indicators here. We have this little rounding bottom here. The relative strength, this is PMC indicator, shows that it reflects that it's improving with the market. It closed greater than that line in the sand, and there was some okay volume. So with that said, this is a weekly chart. Now let's take a look, and I'm going to change this to XOP. And when I look at it, I go, well, the XOP looks good too, and that's the oil and gas exploration sector. But I for me, when I look at the market that has already broken out, and this already broke out, and it's stalling up against old highs, the volume's not expressively great. The relative strength is weaker. It's made new highs compared to last price point, and yet the relative strength, maybe it needs a little bit more since it's a weekly chart. We have one more day to go, and we'll see how this is. But also, volume here doesn't look like it's really getting the full attention it deserves. So I believe that at least in the near term, we could see a pullback in this space, but I like OIH relative to the XOP. Either way, I think the energy sector is looking pretty wholesome here. The GE trade, I tweeted out, you may see these tweets. We were long this from around 1292, 1294 area, and we wanted to add on to positions if it broken near support, but it rallied up a little too far, too fast, in my humble opinion. We put out the order to get out. But for the first time, I just want to point something out to you about GE. What's really special about this buy signal right here, the relative strength seems to be improving, and it's on better volume. I still think that if we share with you one quick analysis that I gave to our traders in our community, with GE, this is a monthly chart. GE, when it bottoms out, it generally goes and tests the lows more than as you see back over in here or back over in here. Except for this massive decline, it had a dead cat, this little first reactionary rally. But look what it did. It chopped around for more than 2 months. More than 2 months. So as we are coming up against declining moving averages, the month is next Tuesday. So maybe early next week, think of it in terms like this. Between 1 month and another, you made a low. So between um, March and April was like, if we go and dissect this on a weekly chart real quick and look at where the lows were. Look where the lows were between 1 month and the next. So it looks like on a monthly chart it was a month apart. No, it was like really within a week. So guess what happens now? We have a new month on Tuesday. So early next week, if you do get a pullback, that'll be like the test on a monthly basis, 3 months in a row. And you could look at maybe buying GE on a deeper pullback in the mid 13s. And that's what we're going to be looking for and have orders working down below the market for that. Either way, let's take a look at the overall health of the market. On my analysis, as we talked about this morning, longer term, we're positioned for the Russell to see a new upside in the market. It's just coming a little bit slower than we want. It's happening on the market's time, not our time. The analysis did not indicate a new low or a crash coming quite yet. We're nowhere near that look-see with the indicators, both volume and, of course, the advanced decline. So with that stated, it's kind of a tricky market in the sense that not all stocks are going up in every sector and not all stocks are going down. And it's a real hard argument with these earnings results to sit there and say, shoot, I ought to be bearish and selling this rally, because it's not there yet. Yes, Google had a disaster reaction. If you think about it, in the after hours when earnings came out, it got up to 11:20 and or 11:15, excuse me, was a high. 11:15. Goog was 1100 on earnings, and then this night after earnings came out, believe it or not, Google was trading Google. Google was trading up near 11:15 and had one whale of a wide range. That was just excessive. Now, I think what it is there was not a lot of open interest. There's not a lot of volume in these options. So that was a pretty wild play. And it's down against the base. And with Facebook's recovery, and we take a look at Facebook and doing what, as we see, completely blow off to the upside, Facebook probably will come in to filling a gap above the market and stall. But we have this gap down there. So if we go up and do business and finish business and fill that gap somewhere in the 180s, then, stall around. I believe that'll be the top for at least temporarily going into the May time period. Selling may go away. No one ever said it was the 1st of May. But I do think that this is going to be very good for the overall market. We had good numbers coming in Eli Lilly. This was a stock we wanted to buy on a pullback that never came about. We had a nice, you'll probably see this orange-blue combination, another high closed doji, and it had follow-through. This week, guess what? It's going to close greater than that resistance, which we call the last conditional change. A very powerful indicator that shows it breaks out of overhead resistance. I find it more beneficial to see what price was created and resistance was established when a market closes greater than that resistance. If we get an uptick in volume and the relative strength's improving, it tells me we have potential momentum power behind the move. And that's the key to what the last conditional change is all about. It's revolutionary, and I believe it's a lot more efficient than other moving average components that people would be looking at or products, even like Bollinger Band. But I think if for how those are constructed, those indicators are constructed, they're based on price. So price action alone, obviously, all we've done is just clearly illustrated the overall support and resistance. Here's a white line in the sand. The market pulls back to support and springboards. Here's a resistance line. Market tries to go through it. It trades through it. It doesn't close. X means close. It doesn't close above it. It just has these last conditional changes are so paramount. It's just an incredible tool, and it helps us to define the quality of the buy signal. Did it break out of resistance? Are we getting that? So Exxon right now is blinking that it generated a close greater than, and we'll get earnings reports out of Exxon for tomorrow. And based on the fact that the entire energy sector is performing well, based on the relative strength improvement of the market, and based on the overall volume action, this is a proprietary volume tool. Looking at this and looking at the relative strength, I would suspect we are going to see Exxon tomorrow probably get back just because it's been one of the biggest dogs of the energy space. I think you're going to see some really tremendous upside. Today in the algo world, it was kind of an interesting, choppy, up and down day for our Dow model, but it performed pretty well. I mean, we gained some profits today, so it was a nice day. It caught upside, it took a long, got stopped out, was short. As you can see, it chopped around, got out, it went short, it got out. It's long 2 contracts, and we'll see what happens as we go through the Globex close. This will hold the position into the next session. So either way you look at it, it was a pretty decent trading session. And I think moving forward, we're going to have, again, some continuation to the upside. Next week, I got to tell you something. If you think this was a rough week from earnings standpoint, next week, guys, hang on, ladies and gentlemen, because we've got all kinds of stuff coming out for if there's something here for everyone. Let's put it that way. We've got more in the restaurant fast food with McDonald's, widely held uh, preferred stock, of course, or preferred stock. It's not. I'm not talking McDonald's preferred stock. I'm talking about preferred by institutions, widely held. Um, Rambus is coming out. T-Mobile's coming out. We've got Archer Daniels, Midland, Triple L, Insight, biotech stock. I mean, the list goes on and on. And it's on Tuesday. It's a lot of small cap energy. Noble. Uh, we have who else? Neighbors, and of course Merck. And you know what? I want to show you Merck because, as I mentioned a few minutes ago, and I know we talked probably a little bit of stuff. Merck is for a for all intensive purposes, if I look at the weekly charts, the volume's improving, the relative strength just turned positive, and the on balance volume indicator just broke out to a newer high. Doesn't really show me a lot of love. Wait a minute, let's look at the monthly chart because this is very interesting on a higher degree time frame. Oh, it's I don't know where we're going to close, but that was a doji. And if we close greater than this line in the sand, that's a monthly buy signal. We covered this in the room as well. More times than not, when you get those high closed dojis. Now, since 2009, we haven't had a whole lot of these patterns, but on a monthly basis. But literally, almost every time we've gotten a high closed doji, so far it's 100% on those 3 signals. After market declines, after sideways to downside action, sideways to downside action, sideways to downside action. If this gives us a high closed doji pattern, it's giving an idea that the market could go up even further over time. And guess what? Volume indicators support that idea because we are seeing a rise in trend. The volume's actually leading price in this case. So next week, Merck could be important. It's been a dog stock, I don't know, for a long time for a lot of investors. Define dog. Well, if you bought this in 2000, I mean, keep in mind no splits, but if you bought this stock, you're sitting here going, God, it's a waste of capital. Talk about a poor rate of return on investment, right? This is a name I think a lot of people would like to see go up, and yet maybe this time around's different. We could see an upside move because we are getting that um, reflection of seasonality coming into the market. This is a stock called Celgene, and Celgene got its butt kicked. And while the monthly doesn't look as impressive as the chart patterns and indicators show with um, Merck, is as far as the biotech is concerned, I think we look at the shorter term time frame and we'd say, well, gee, Celgene had a little high closed doji. You know what it did today, gang? It broke out of a lot of these gray patterns right here. It broke out and closed greater and provided a last conditional change and HCD uh, on improved volume and relative strength is positive, and that's positive. So uh, I think that maybe the focus going into the next few weeks, we could see some rotation with comfort levels increasing in equities overall based on the numbers that we've seen with the technology. Putting one and one together, if an institution or at least fund managers felt that the stock market rally was in jeopardy, the Fed was going to raise rates more than what was priced in the market, if people decide that money can come in on the sidelines and there's still value in equities, we might see a shift or rotation. If the overall level of confidence increases in the market, we may see an uplift in some of these drug and biotech sector. We'll keep you posted. Just wanted to share you what my work is showing in the charts and what some of these indicators are really doing for us, at least helping us to stay on the right side of the market. With that said, I hope you enjoyed the video and, of course, at least an explanation a little bit more in depth on some of the signals and the indicators that we've created here and the patterns such as the high close doji. Thanks, everyone.